Welcome to the live roundtable panel discussion on budget 2023. So before we start off on this budget, it would be great for us and for your benefit if you can clearly, if you can, quickly say that we are audible and you guys can clearly see us. Yes. So I guess we'll start off. So, budget 2023 was announced today. It probably got over by 2:30 max to max, or actually the announcements was done by 1:15, 1:30, and then post submission of the budgets and everything happened by 2:30. So there is a lot of uh, question. I'm pretty sure that you guys have quite a lot of questions because there was some change in custom duty and there has been some change in personal income tax. And most of you all are wondering whether investment is now, is it right to make investment now because of some change in the budget, and what sort of tax benefits has been provided to us by the finance ministry. So all these questions will be answered in this session. Do remember to stay through this entire session. So, and whatever questions you have that you want our a panel of experts to answer, please drop them in the comment section. And once the session is about to get concluded in the last 15 minutes, we'll have a quick question and answer, and we'll pick them out one by one. So um, we'll quickly introduce ourselves. I'm Manikandan, and I'm a tax expert at ClearTax. So we have Saikat with us. Saikat, could you please?
Yes, sure. I am CA Shukatra, and I have been a part of CA team of ClearTax for 4.5 years now. And my expertise lies in income tax and international taxation. Over to you, Vivek.
Yeah, hello everyone. I'm Vivek Mashrani. I'm founder of Technofunda Investing Ventures, and I've been into investing since long time. Was investment banker earlier, author of the book You Can Compound, and yeah, investing is my passion, and that's where we are here together to dissect the markets and investing for you after the budget.
Sonami, it would be great if you could say something.
Definitely, definitely. I'm also in the investment side of this panel along with Vivek. And to introduce myself, I'm Sonam Srivastava. I am the founder of Right Research, which is an investment advisory firm, and we operate in the public markets in India. And the approach that Right Research follows is highly quantitative research driven. And I love to give you an analytical view of where you should invest with this budget in this session.
Thank you. Thank you for that, introduction. So before we start off with our discussion about the budget, so what was your take on the budget? Are you happy with the budget? Do you think this was a budget that none of us expected? Hopefully, in the good sense, or what did you miss in the budget that you were most expecting and it did not come? And anything else that you would want to share with us about this budget before we start off to the core topics that will also be helpful.
So, see, the budget sort of delivered on the front that we were looking at it for, right? We were looking for infrastructure spending, which where they delivered. We were looking for fiscal prudence, right? That they shouldn't be spending too much on welfare and put the fiscal deficit in trouble, which didn't happen. So it was a positive on both these fronts. Plus, there were a lot of interesting additions that happened with the tax regime change and the tax incentive in the new regimes. So overall, it was a great budget, but given the macro scenario that we are in, the effect of it for the investors, will be something that we need to evaluate.
So from investment point of view, mostly from equity or mutual funds,
Hmm.
you're saying this budget did deliver, or it was up to your expectations, or at least can I take
No,
it like that?
definitely, definitely. As an investor, I think it did its job, and so yeah, I think that was that there it did deliver.
Okay. So, few topics that we will discuss, like I said earlier, was on investment part and on the equity side and mutual funds or debentures or other investment asset classes, and on the personal income taxes and corporate taxes. So how about we start off with the investment part first, because that is what most people are eager to know, because they know that taxes is always not a very a very friendly news for them, because year end whatever profit they make, they have to pay the tax on it. So let's keep the taxation part to the end, and we can first take up with the investment part. So Mr. Vivek, if you can tell us what opportunities are there for our investors or for the Indian taxpayers now, starting from Feb 2023, from today until for the next year.
See, India, it's anyways land of opportunities, and we are probably in the multi-year of growth run. So starting 2014 itself, we have seen the focus of government has been growth side with a fiscal prudence. Like we have, as Sonam rightly said, not stretched the balance sheet too much. At the same time, our focus has been on growth and multiple measures, which government took in terms of removing gas subsidy for middle class, and then note bandi to an extent, the you know rera which came in, which also curbed a lot of malpractices in the real estate and black money side of things. I think directionally the budget is still going in that same direction. So one thing which always we should appreciate is, if government is any government for that matter, I'm not a fan of BJP or not criticizing Congress or anything, but if there is a consistency, right, all of us will appreciate that consistency. Okay, that this is the direction we are going, and there won't be any surprises in this direction. That brings a lot of predictability to the businesses, that brings a lot of predictability to the investors, that brings a lot of predictability to our life also, that okay, this is the direction which we need to go. So that way I think it is a very, very balanced budget. And in terms of investment, I think a couple of things have happened, and I think, of course, when you are discussing taxation part, you will of course discuss in detail. But one thing that has happened is, government has tried to tax some of the arbitrage which was there in the investment arena. So say for example, insurance, you could have parked money into annuity plans and then got away with the taxation on the long run. Same way, there are like market linked debentures where you are paying just 10% kind of tax. So all those avenues they are cutting, and they are saying, hey, you just focus on equity and bonds as a pure play asset class. And directionally, I think it's a very great for investors.
Okay. So which sectors would fare the most out of this budget from the equity side?
So
Sector
Sonam, you
specific,
want
if
to
you have to say,
add
like.
first, and then I'll probably add my perspective if you want to go next.
You're asking me to go for it?
Yeah, you can go for it,
Yeah,
and then I'll
definitely.
add few
Yeah.
of my perspective.
Yeah, definitely. So I think you see the biggest focus came on the infrastructure space, right? Uh, the government has increased the capex levels by 33%, right? Which is passive, which is nobody expected, right? We were expecting it to be much lower, and so a lot of money is going to come into the infrastructure sector. That means that railways, logistical sector, your cement, capital goods, and a number of other players in this whole space will will continue to grow. Right? They have been quite robust. The growth scenario in the country, right, where India is growing structurally, recovering from COVID, and businesses are spending more. I think the whole infrastructure space would be a good place to buy into. Obviously, we are seeing that some of the industries have already run. Like for the railway stocks, we saw that they did actually correct today instead of grow, right? So that is one thing where we have to be careful about. But overall, this sector gets a huge boost. So that would be one thing. Second thing would be, the new economy sectors, right? So the government of India has always been focused on developing a new manufacturing sector in India, right? From developing mobile phones in India to capital goods, fridge, TV, and all those components out here in India. I think all those sectors will continue to get a boost, and we should look out for stocks in those industries. So that means white goods. That means stocks like Blue Stars or FIAM Industries will be very interesting. So that's the second I think sector that we can look at. Then you have, your green energy sector. It's always a favorite of the government. It's announced in every budget that we want to meet our sustainability goals in the long run. A lot of budget has been allocated there, and we saw battery makers especially trending today. That is another sector that people can pick up. Apart from this, we have a huge boost. I mean, we saw India Hotels was the biggest trending stock in the market today, and there were certain rules announced on source tax at source to be charged for these international travels to be increased from 5 to 20%, which means that they'll focus more on the domestic sector for travel. And there should be an interesting development happening in the hotel industry also. On the financial sector, I think, see, private banks trended and PSU banks are maybe struggling because of the broader risk that is there in the market. But on the private sector, the credit continues to grow and there is focus on growing credit further. So I think private sector banks are interesting. Similarly, NBFCs are also quite interesting as there's a focus on growing the credit economy.
Thank you. So, if I, as an investor, now if I have to, let us say I have a capital of 1 lakh and I want to invest in the stocks after this budget. So, how would you advise that I allocate this amount among the, those 3, 4 sectors or 5 sectors, according to you, or what would be your wish list of sectors and stocks?
Right. So, see, I think like budget is a big event, right? But we also have to be aware of the bigger macroeconomic scenario, right? Right now India is not the hottest investment destination by FIIs. There's a lot of more investment going into China right now, right? Because of that, you are seeing investment coming to the metal sector. Similarly, if you look at US, the stock market is going there faster than India, so the IT sector right now is recovering. So we have to be aware of that, and along with it we can see that a big focus has all obviously come into the Indian infrastructure space also. So I would say that if you want to allocate right now, it should be a diverse basket that should include infrastructure, cyclical sectors. You should include financial services. Be a little bit careful about the PSU banks right now because of risk exposure. You could allocate to NBFCs right now along with private banks. You could allocate to the new India industries, right? A slightly smaller stock that are gaining because of the government incentives. You could allocate to the travel sector, I guess, and then you can start looking at the auto and the IT sector also because of their global growth headwinds.
So then again, I would have to again monitor at
Mm,
least the top 2 or top 3 stocks in each of these sectors and see how the sector is performing. And after that, I would have to uh, do a, take a decision on allocation of my capital. I cannot
definitely,
go
and
with
yeah,
30, 30,
I
30
think this
or
is
something like
because we have been in a volatile market regime for some time, so we always have to be very diversified, right? Not be highly allocated to one sector or industry. We have to keep it diversified and be a little bit tactical right now, given how the market is evolving.
that. Got it. So, hello, can you hear me now?
Yeah, yeah, it's audible.
There was a small internet issue. So, if I have the takeaway from what Sonam said now is that I have to monitor the market again. I cannot just take a decision based on this budget alone. And then,
So the budget gives you a very clear indication that infrastructure is a big sector to bet on. But apart from it, we have to look at it, the overall global scenario and overall macro scenario to take our bets.
got it. Vivek, would you like to add something to it, or
Yeah, sure. So basically, see, I think Sonam rightly said, if we see the structuring and even if we link with the tax part, what government has tried to do, if we see the thought process or the directionally where government want to go is clearly to the new regime. They have incentivized 2 lakh rupees more for the rebate, and they have not given any incentive in the old regime. So that directionally says that they don't want people to just put money based on the tax incentive, and that has been thought process from multiple angles. If you even we talk about the insurance tweak they have done in terms of taxation, in terms of non ulips, even in the market linked debentures, and even other parameters which they have tweaked. The clear direction is that they want us to not think about tax too much just for the sake of putting money and saving taxes. And that means more money is in the hands of people. So the more money you have, the more you are going to spend. So the direction is from savings to spending side of the things, that you spend more, you spur the economy, and that M3 effect will take care of the entire circulation of money. And same thing government has done on its own balance sheet also. They have done a lot of capex related spending, rather than giving money and freebies. That is a first order effect. It will just create a one layer of circulation of money. But this is much faster and a structural change. Like if you create a road today, that 1 rupee spent on road will help us 10 years, 15 years, 30 years down the line. But 1 rupee spent on some free food or something, that is not going to help us structurally in the long run. So the point is, directionally we are going on the spending side. So as Sonam rightly said, consumption, FMCG, white goods, all related sectors related to consumption will take a good tailwinds going forward. Second, the clear direction has been, which has been since 2014, is curbing the black money economy. So all the parallel economy which is going on, they want to curb it slowly. And that is where, if you see on the that front also, they have given incentive to sectors which are on the capex side, not on the housing side and all that. So although there is an affordable housing scheme which is there, but if you go through the fine prints, they've incentivized the 10 crore plus houses for the capital gains. So people were just parking their money into 50 crore, 100 crore houses just to save tax and rotating the houses. That anymore is not possible. So that big chunk of money is going to again flow back to the economy. Another very important point is, if you see the structure, like where that 80C 80D deductions were going. One was force ulips, where people were just parking. Second is just ELSs, where just for the sake of saving tax people are parking money. Third is uh, NPS and all other different things which were there in 80D in terms of medical insurance and all that. That will go away. Now government is saying, if you need term insurance, just buy it. If you need health insurance, just buy it. You don't need to run behind the tax incentive to do that. So that will bring a lot of money again into the economy. The new regime will also eradicate all the interest on home loan benefits. So that again is curbing real estate in an indirect way. So that is where directionally, capex related sectors and consumption related sectors will have a clear tailwinds going forward. That is what is the direction government is saying.
So, based on your experience on interacting with different segments of users or different kinds of users, uh, would has a good chunk of people ever asked you to say that which investment or which instrument can I invest to save tax? Because until yesterday, before the budget, like you said, the core focus was only on saving taxes or where can I invest to save taxes. Even
Yes.
today, if you see, most of us consider buying a house only when there is because there is some
Tax
tax benefit attached to the home loan. I'm not going to say that that is not a big benefit, because 3.5 lakh rupees of deduction against your existing loan commitment is definitely a relief
benefit.
for a taxpayer who's earning say 12, 13 lakhs and odd amount. But
Yeah,
is the government hinting to say that going forward, I don't want you to just buy a house for the sake of taking a
actually,
tax benefit? Instead, even if you take a housing loan, do it for as an investment point of view. Because if
absolutely.
that is the case, then I'm sure that the interest amount that I pay, I cannot treat it as cost of my asset, right? Because
Mm,
from the fine print of the finance bill, what we see, there has been some changes with respect to cost of acquisition. Few very very what can I say, very minute things which was not addressed in the past, and which people, what I understand from psychiatrists, is that people were taking advantage of. They've covered or they've closed all of those.
yeah.
So effective today, or at least just this budget is very fresh. Are you saying that if you're buying a house, buy solely for the purpose of an investment and for creating an asset, and not just for the purpose of claiming tax benefits, but be mentally prepared to forego the tax benefit that you are enjoying today. Because if this is the trend that the government wants to maintain in terms of budget, then down the line in another 2 or 3 budgets, they will probably scrap out all these
Yeah,
deductions. Is
absolutely.
that what you're trying to say?
Yeah, absolutely. So, see, first of all, house is never an investment as such. If you are using a house for living, it's just a dead investment actually, right? So, a lot of time, what
I
used
think
to happen, and I've seen
most
that.
people in the household would disagree to that. It is not a
Yeah,
dead
it's fine. See,
investment.
I used to think like that, and first thing which I did when I was doing my job, I did same thing. There is nothing different in terms of mindset. I will tell why. It's a good advantage and why this is good overall for the mindset also. See, if we are earning say 1 lakh rupees and we feel that okay, we will save like 20, 30,000 in the tax. What used to happen is people used to buy maximum amount of house, like say 50 lakh, 60 lakh, 1 crore, whatever extent you can save maximum tax. They were buying it forcefully. Even if they don't need 3 bhk, they will buy a 3 bhk despite they need 2 bhk. So now what the thought process is, government is not taking away the tax. They are saying you take it upfront in the new regime. Whatever average deduction we were giving you, you don't need to like forcefully do it. We'll give you approximate average amount which 70% of taxpayers are using, and you use it wherever you want. If you feel house is a good investment, you put it there. If you feel I need 2 bhk, you buy 2 bhk. If you feel 4 bhk is good enough for me, buy 4 bhk. Because the thing that used to happen is people are just buying house for the sake of tax benefit, and a very big ticket house just for the tax benefit. And they were not able to invest other avenues, where they could have parked their savings. Because house, even if you're living, you cannot get any income out of it. And you might live at a much lesser rent. And again, that rent versus owning is a very big debate. I personally believe in owning house because of peace of mind, but you can live at a much lesser amount by just renting a house as such, because of again black economy and lot of cash component in our economy. So that ways, it is friendly for a common man, because now you have a choice. You don't need to forcefully do it. If you want to buy it, you any which ways are on a new regime, you go and buy it. There is no additional benefit you are going to get.
Got it. So, since the primary focus is on capacity building or improving our existing infrastructure to ensure that more people are spending money, which helps in reviving the economy, or like better roads, better technological development. So, on the infra part, would you recommend that users should research or screen or look for stocks that are in infra the sector, or is it advisable for them to park their money in any of the bonds or debentures of some company that is involved in infra? Like, what is better? Because in stocks you only get dividend and the growth or price appreciation, whereas most people would prefer to invest a good chunk of their amount. They are also looking to invest in bonds also, but bond market is not for everyone. At least that is my understanding, because you need to have say 6 7 lakhs or even say 10 lakhs of capital to actually enter the bond market, right? Please correct me if I'm wrong. So what would you recommend,
So see, my
investing in stocks or?
perspective, it's not like either bond or equity. Okay, we have to have a broad asset allocation where there should be allocation for fixed income, there should be allocation for equity. Having said that, there are a lot of bonds available like Bharat bond ETFs and those kind of instruments where you can indirectly take advantage of the underlying bonds of various companies, and in fact in a diversified way with a small ticket size also. And equity is for growth, so anything for long term, more than 5 years, if you invest in bond, your inflation will eat it away. So bond is like short term goals, like anything less than 5 years you park it in bond. Remaining for the long term growth more than 5 years, it is definitely equity. There is no other option. And now from this budget it is even more clearer, because government has removed the big ticket insurance premiums also. They have started taxing it. Even the market linked debentures, they have started taxing it. Even if you are a high ticket, say 10 crore plus, you are parking in house and taking advantage of tax, that is also taken away. So it's just a asset allocation, and I think both are important, to achieve our holistic goals. But I would like even Sonam to add on it, because she is dealing with this subject day in day out, and helping other investors to grow.
No, definitely. So I think talking about infrastructure bonds or infrastructure stocks, I think whereas infrastructure stocks might be interesting at this point in time, right? They're giving you quite a decent yield, so you could allocate to them to be a part of your long-term portfolio, the bond part of it. But on the equity part, I think picking stocks in the infrastructure sector, picking stock in the manufacturing sector is already extremely interesting. You're getting very good returns out of these infrastructure companies. So I would continue to do that, and I think investors should start looking at that sector seriously. I think in the next uh, year and the next few years, this space will be very very interesting. India, like the FM said, is on a growth path, and they want infrastructure and the ease of doing business in India to be a key part of it. So I would love to pick up stocks in this sector and participate in that story.
Good.
And another perspective is, you can even think about a proxy investing. Like, say, for example, if roads are being built or dams are getting built, who will benefit from that growth? So it could be some capital goods company, it could be piping companies, it could be cement companies, right? So the second order, third order companies also we can think about investing in, because generally what happens is in infrastructure you don't get too many options, and there are very less number of clean companies in that sector, and even the returns on investment and all that is not that lucrative the way we want as an investor. So you can always look for proxy growth stories. So what is benefiting the infrastructure, that is also a nice way to think about investing and taking advantage of this sector growth.
Definitely.
So, what is your take on InvITs, infrastructure investment, trusts, or at least do you think that there will be a rise in REITs and InvITs in India in the next 1 or 2 years? Like instead of looking for stocks, if someone is finding it very difficult to identify stocks that are in the infra space, because if one has to do a self research, there is also a risk that he might be picking the wrong stock. Whereas investing in these trusts are at least fairly safe because they have a very big team, technically sound team, which would actually scout for all these large infrastructure projects, and then they handle the part with respect to investments. As of today, we have few REITs which are already listed on our exchanges, but I think there is hardly one, or maybe I don't know if there are any InvITs in India. So do you think this budget or the announcements or the government's focus on improving our infrastructure will give rise to listing of any InvITs in our exchanges in the next 1 or 2 years?
No, I think
I
definitely.
Yeah, yeah.
No,
Please go on, sorry.
no, no. Yeah, so I think definitely, that's also a great avenue. But given that there won't be a tax benefit for that in the new regime, I would, that remains a question to be answered, right? How would the government incentivize investees, to be the prominent vehicle? Vivek, you can take it up from.
Yeah, so basically, see, REITs and InvITs, InvITs definitely you will see a lot of them. Both of them are actually very, very preliminary stage we are in. It has a huge scope, and particularly when the unorganized market is getting organized, the incentive to direct real estate is getting lesser. The curb on black money is there, and even the 7 lakh things. You think about it, like a lot of people will start creating files, right? So those who had 6 lakh, 7 lakh income and hiding 2 3 lakh extra just because of tax benefit, they will start declaring that income, and because of that the file or the white money for people in the bank account will start increasing. So then if real estate directly is not a lucrative option, and if you want to take advantage of real estate, and if you are getting same rental yields, why not to invest in REITs, right? And the best part is you can sell it like next day. Now it is T+1, you sell it today, tomorrow you get it. Even if you have 1 crore worth of REIT, you want 5 lakh rupees of liquidity, you sell 5 lakh worth of it, which is not possible in a physical real estate. If you have a full office of 1 CR, you cannot sell like a 10 lakh rupees of office one fine day when you wake up. So that way, I think it's a great vehicle for somebody who has white money in their bank account, and they don't want to just get into a black economy just to, park money somewhere in the real estate. It's a great avenue to do it. Secondly, most of the REITs right now, only the interest component is taxable. So almost 90% of money there is tax free. But now this year, what government has introduced is a tax on the amortization of the principal amount, which was not there earlier. So REITs like Embassy, they used to give like 90% as a amortization of debt and dividend income and a rental income, and 10% was the interest component. So 90% was tax free. Of course it gets taxed at the company level, as Sonam rightly said, but then on the hands of investor it was almost tax free. But now almost 50% of that money is taxed because of the changes which government has done right now. So that was few of these REITs will get affected in the short run, but the price will take care of it, and it will correct in the short term. But long term it is a great vehicle to take exposure of your real estate side of portfolio allocation. Again, it's not a proxy of equity, because equity is a higher risk, higher growth game, and this is a more of a middle of fixed income and equity kind of portfolio exposure.
Got it. Thank you for that, information, because generally most of us are unaware about this. At least we hear from our friends who say that this might be a right time for you to consider investing in a REIT or something, or do like an SIP sort of thing in REITs. Because some of us, at least most people, instead of doing SIP in mutual funds, they pick one or two stock and decide to do SIP in that stock. So with that, information, what you would recommend is don't look at REIT as an alternative to equity, because it is not tax free anymore. There is a tax element involved. So you're
Yeah.
not going to, it's not like how LTCG was in the back, before the, you know, at least before the budget.
Yes.
So, like our finance minister said, we are coming to the main part, at least that part where most of us are actually, eagerly waiting to know. So, direct tax amendments. So, uh, I think we've given a few hints here and there, nothing major, nothing to say that I'm going to save here or save there. It has not been a tax saver oriented or tax
Yeah.
saving oriented budget, but rather income generation oriented budget, you can say. Don't
Yes.
bother about the tax that you pay to me. I'm going to ensure that in the future I spend the money that I collect in the form of taxes towards infrastructure,
Efficiency.
and to ensure that the economy grows in wherein you get investment opportunities or revenue sources. So, Saikat, coming to you, since taxation is your part, uh, what are the major changes in direct taxes in this budget?
Well, Mani, so basically, what happens? The theme of this budget was to circulate the money, as Vivek has said. I am going to not bother you about saving the taxes. I'm going to put some amount of money in your hand so that you can just go ahead and spend the money. And from there onwards, I will be giving you much more better infrastructure. And this is a very wonderful loop that has been created, I would say. And further, this budget actually has a huge crackdown on black money, I would say, because they are incentivizing small businesses or freelancers who are earning money, right? Other in a mode other than cash. So basically, small businesses or freelancers, what they do is they are not required to maintain books of accounts, provided they are opting for presumptive taxation, right? So excuse me. So there are certain changes has been made on the presumptive taxation for small businesses. Uh, the ambit of presumptive taxation has been broadened to 3 CR, provided their cash receipt is no more than 5% of their total receipt, right? So in that case, they can just go ahead and opt for presumptive taxation. Secondly, for freelancers, again, the ambit has been increased to 75 lakh rupees as opposed to 50 lakh rupees. Furthermore, also 5% cash receipt option is also there. The clause is also there. So this is a very good opportunity to digitize India, right? So that you can receive the money through digital mode. Further, it should be noted that uh, bearer check, right, that has been categorized as cash expenses or other
Okay.
cash receipt. So if you are receiving money through bearer check and if you are thinking, all right, I have received money through banking channels, that is not the right way to think. So for those businesses, small businesses and freelancers, this has been an important thing. Further, like Money said, for home loans, right? A small change has been made. So if I have taken benefit for home loan deduction, right, under section 24B, now I cannot include that interest payment at cost of acquisition as cost of acquisition or cost of improvement. So previously this was a loophole in my opinion, wherein if I am paying interest, I could have gone ahead and capitalized that cost of interest payment. Now it has been completely curtailed. So even if I'm paying interest, I cannot simply just go ahead and take it, provided I have taken deduction under section 24. So that's an important thing that has been done.
So, on presumptive taxation, since the government has increased the turnover threshold or the gross receipt threshold, is there any effect for that in tax audit? Like, even though I have 3 crores of gross receipts of turnover, and if I opt for presumptive taxation, what is the implication, or what implications I can avoid, or what compliances will not be applicable to me from tax audit perspective?
Well, Mani, that was a wonderful question. And yes, in previous times, it has created a lot of confusion in the minds of taxpayers, right? Because tax audit limit previously it was 1 CR, right? I am not talking about special consideration.
Okay.
So presumptive taxation limit was 2 CR. So people used to get very confused that I'm not maintaining books of accounts, but I'm going for presumptive taxation. My turnover is 1.5 CR. So do I need to get my books of accounts audited? And later point of time, CBDT has come up with a circular which said that no, it is not needed. So right now, this circular has been embedded in the act itself by the way of proviso. So if you are opting for presumptive taxation, then the tax audit sections will not be made applicable for you. Now this has been made a part of the section itself. So there is no requirement for circular or notification or any of that.
Okay.
Uh,
So one, I think one amendment which is definitely a boon for all the MSMEs or small business houses is that presumptive, taxation. But then on the other side, since they have not given me any sort of a benefit by enhancing ATC limit or ATD limit or anything, do I have anything else to be happy about? Like, are they giving me some sort of a benefit in the part of a, say, rebate? Have they increased rebate, or how is it?
Well, Mani, so certainly as Vivek has said that we are moving towards the new tax regimes. So we are slowly but surely moving towards new tax regimes, and people are encouraged to move to migrate to new tax regime, and that has been done very much systematically, which we have seen a glimpse of, right? So Section 87A rebate that was there. So that limit has been increased under the new tax regime. Under the old tax regime, it is still 2,500 till my income level of 5 lakh rupees. But under the new tax regime, the income limit has been increased to 7 lakhs, and the rebate also have been increased to 25 lakh, which is doubled.
25,000.
25,000, sorry, 25,000, which is doubled. So yes, so people are systematically pulled towards the new tax regime. Furthermore, the slab rate under the new tax regime has changed drastically. Right now, there are 5 slabs. So up to 3 lakh rupees, there is no taxes or the tax rate is zero. From 3 lakhs to 6 lakh, the rate of tax is 5%. And 6 to 9, it is 10%. 9 to 12 it is 15%, 12 to 15 it is 20%, and beyond that it is 30%, right? Also for the new tax regime, people who are opting for new tax regime, the surcharge rate has also been curtailed. So previously there were 4 surcharge rates under the new tax regime and the old tax regime. Under the old tax regime it is still 4, but new tax regime it has been brought down to 3. So the highest tax slab surcharge rate that was 37%, that has been abolished. So if your income is more than 2 lakhs, you have to pay surcharge of only or rather 25%, right? Instead of paying surcharge of 37% if your income is more than 5 CR. So that has been a important aspect of this budget for HNIs, I would say.
So they have, I think they have rationalized the slabs in the new tax regime from, I think the earlier slab breakup was like 6 slabs we had, now they've brought down to 5. So indirectly, or not indirectly, sorry, I think directly the benefit will be enjoyed by those taxpayers who were paying 30% tax earlier, because
Hmm.
slab rates are now, slightly rationalized with every, 3 lakh rupees. Earlier it was
Correct.
every 2.5 lakhs,
2.5
so
lakh.
now it is 3 lakhs. So there is a 50,000 rupees of benefit that you get over there.
Further
And
money, there is one thing I would like to mention that standard deduction. Previously, standard deduction option was only available for the old tax regime, but now standard deduction has been made available under the new tax regime as well. So again, like our finance minister said in the budget, if your income is more than 15.5 lakh rupees, you can save a tax of 52,500 rupees. That is actually true because of two factors. Number one, I have been given the standard deduction of 50,000 rupees. Number two, there is an increase of slabs by 50,000 rupees. So by these two actions, our tax saving can see a very big jump, I would say. Even though the primary motto of this budget was to not to save taxes, to give you money, but there is some tax saving in the process, and I think taxpayers will be very happy to see this thing.
I think we'll know only during the next filing season, when whether people are opting for the new regime or not. So until then, we can only hope that this should be some sort of a relief to taxpayers. So besides this, I think an added benefit has been given to high income earners by way of reducing the surcharge rate by bringing it down to 25 12% reduction in surcharge rate will definitely increase the income in the hands of HNIs, I can say. So besides this, is there anything else that a taxpayer should be happy about in this budget from direct taxes perspective?
Well, certainly, yes. For salaried class of people, there is one more good news. So, leave encashment, right? So, leave encashment limit was previously set at 3 lakh rupees in a lifetime, but right now, after the budget, it has been set to 25 lakhs, which I would say is quite generous. And this has been extended to all class of employees, government, non-government, every person. So, leave encashment at the time of their retirement or job change. Uh, the limit has been increased to 25 lakhs in a lifetime, and we have seen a lot of people switching jobs. They are trying to take advantage of leave encashment, but they are not able to do so because the limit is so low, right? It is 3 lakh rupees. So they are planning for their future. All right, in the future, whenever I get the leave encashment, I will retire finally, and I will take the benefit of it. Right now, they can actually, exercise very cautiously. They can do a calculation in their mind that I have another 4 5 years of service with my hand, or 15 20 years of service. So right now, let me exercise leave encashment, and later part of time, I'm going to forego the leave encashment. So there is a lot of tax planning that can happen at this level. So leave encashment is one important thing, important relief that has been extended, and that's about it from the perspective of
So
salaried class.
besides the basic personal income tax, is there any thing on crypto taxation? Because that is also another point that most taxpayers, at least, are actually eager to know, because with the crash in the crypto market, and if someone decided to sell off, they would have booked some losses. So what is the taxation of crypto assets, or what are the fine nuances in taxation of crypto? Uh,
Well, Mani, I think you are the best person to speak about this because you are way too much deep in crypto taxation matters. So it's better you answer this.
So there is no major change between last budget and in the current budget, at least in crypto taxes. You will still be taxed at the rate of 30% on the gains that you make, and you cannot carry forward the losses or set off the loss that you've suffered in the crypto assets against your other traditional assets of, say, equity or debentures or mutual funds. So, but we have launched, or we are rather going to launch product for to help our taxpayers in analyzing how much crypto profits they have made and what is the tax implication on that. So very soon you guys will get an update from us on it, so you can watch our website for that. So on crypto front, this is my at least one general inquiry with Vivek and Sonam. uh, there has been a crash, but most of us are saying that it is not advisable to invest in crypto. But still, a good chunk of our Indians are opening up, all these accounts, and they are venturing into crypto. What is your advice to them, or do you think at least just like a game of luck to say, would you say that if somebody wants to take the risk, high risk traders, if you want, you have some idle money that you want to invest in crypto, uh, should they consider doing something like that now?
Okay, so
Not an
basically,
advisory from your, entities, I
yeah,
think just a personal take.
yeah. So basically, see, I look like this. I look at investing. If I can put at least my 10% of my money, then only it's going to put some needle delta in my net worth, right? If I'm having 100 crore net worth, or say 10 crore net worth, and 1 crore I'm putting into crypto and it goes 10% up, it will make some difference to my life. But if I put 1 lakh rupees and it becomes 1.1 lakh and my net worth is like 10 crore rupees, it doesn't make sense, right? So any investment, if you are able to allocate at least 10-15%, do that. And if you want to put 10 to 15% into any asset class, you need to understand it well. So crypto, if you are able to understand, get conviction, if you know what are the moving parts, what are the regulatory things, whether the stock market of crypto will go bust or not, or the crypto, what do you say, crypto exchange will go bust or not, if you are very good at it, or you get an advisor around it, go for it. Otherwise, I don't feel that right now it's a too mature market, and there are a lot of subtle risks. Like if exchange can fail in that asset class, where is the safety there? You are taking extreme risk, and return, I don't know from where it will come, right? So at least I don't understand crypto where I get comfort that okay, it is a stable asset class to right now invest in. Probably in future it might happen. But if, having said that, if somebody really understands it well, if they are able to put 10, 20, 30% of their money into it, go for it. There is no problem around it. But it's not a regulatory, again, aspect. Like even Indian government just, it's putting a tax, but there is no judiciary thing that okay, there is insurance, or there is some judicial resort to the, nothing can be done if your money is gone. That's it.
So basically, if you have idle funds, and if you have sufficient time, and if you are willing to take the risk, and if there is a lot of if connected to this, then you can go, you can look towards
I
crypto.
would rather
Whereas you
go
have
to Las
equity, you
Vegas,
have,
right? I would have fun going Las Vegas rather than putting money there if I have extra funds. At least I'll have some memories remaining with me.
okay, okay. Thank you. Actually, at least I feel the last part was a bit lively for our audience, rather than saying too technical on budget or anything. So I think we are about the end of the session. So just to sum it up, from this budget, we can expect that our broking industry will see further traction. At least now, the focus is not on saving taxes. Rather, instead of investing in ELSs, people will start, investing, or start opening up SIPs or creating SIPs in stocks, or they can invest in these basket, recommendations that most traditional brokers offer. So that will probably further increase the revenue that the government gets in the form of platform charges, transaction charges, and etc. And uh, still, at least for the next 1 year or 2 year, or even for half a decade, you're very bullish on infra sector, and you're bullish on the economy, I can say. And you would recommend people to not consider an investment solely for the purpose of saving taxes, but for the purpose of earning an additional or a passive source of income. Correct? Can I say that this is my takeaway from this session?
Good,
Definitely.
good, good. Yeah.
And from taxation point of view, what me and Saikat have to say is that till date, there is a lot of confusion among most taxpayers on what is new regime, what is old regime. And the government has been, they introduced the new tax regime in the last budget to ensure that, or the intention was for the people to be benefited from the new tax regime. But seeing the response that they've got, I'm pretty sure they have analyzed all their returns that they have received. and 6.4 crore ITRs have been filed. And from that, I guess they understood that people are not, or they were not quite happy with the new tax regime that was introduced in the last budget. So they've rejigged the slab rates and made it more attractive. So if you are wondering whether new tax regime is beneficial for you or not, what you can do is you can explore our tax calculator. Just simply type income tax calculator ClearTax, and this is a very simple web-based calculator. You simply have to put in your salary income, your other sources income, say FD interest or rental income, and you will get a comparative view of the tax liability under both the regimes. So this will help you in taking a decision. Now, if you feel new tax regime is actually beneficial for you because you're saving taxes over there, whatever tax that you save, I think you know where to go and invest. So we have two experts over here. You can probably reach out to them or to their organizations also. They can definitely help you all with the investment advice. So, uh, any
Mani,
questions?
just one thing before we conclude the session. I would like to take a couple of questions because those questions are flooding in.
Okay.
So, one thing that I have seen, people are asking about whether the old tax regime is still available or not. To that, my answer is yes, the old tax regime is still available. However, previous years, till this point of time, old tax regime was our default tax regime, but going forward, the new tax regime will be our default tax regime. If you are declaring, then most definitely it will be selected by default the new tax regime. Under the old tax regime, it is still an option, but you have to choose it. Right? So old tax regime is there, but it's not by default choice. You have to choose it.
So, any other questions from our viewers that we can take up now? We have 5 minutes of time.
Right. So most of the questions are related to the whether new tax regime is the only regime right now or old tax regime is there. Also, so I believe we have addressed that question. And frankly speaking, the treatment of capital gains in the new tax regime, that is as I mean similar to the old tax regime, there is no change as such. So whatever the tax treatment for capital gains was there under the old tax regime, that is the same under the new tax regime. Standard deduction, yes. So standard deduction has been made available if you have salary income or pension income or family pension income. So the amount is 50,000 rupees. So if you have any other sources of income, and if you are opting for the new tax regime, you cannot do that. But for salary and pensions, most definitely you can. And loss carry forward, yes, carry forward of loss is still possible under the new tax regime. So this was the
So
question.
there's one question on what is the benefit for electric vehicle buying. So one benefit is if you purchase this vehicle on loan, then under 80 EEB you get a deduction for the interest component. Besides this, I think one other benefit is your fuel bills will be saved. That is one benefit. I think there will be some benefit for the environment, wherein pollution, at least it is still debated and disputed that you'll, or at least you can feel that carbon emissions will come down. That is one benefit. And it's better to be updated, right? I mean, if the new norm is electric, I think you should go electric. You can probably say. And even if you're not willing to buy an electric vehicle, at least you should invest in stocks that are manufacturing these electric vehicle batteries. And hopefully,
But
if one or two electric vehicle companies get listed very soon, then you can invest in those also.
Many, I would like to say that if you are driving electric car, you are going to get addicted with that power delivery and acceleration. It's something else.
So, can we conclude then? I mean, I think we've answered all the questions from investment viewpoint and from taxation viewpoint. Uh, do our panel members have any questions for us? I mean, we are taking all these taxation related questions from others. Do you guys have any questions for us?
Oh, we'll come to you in March probably.
Definitely, definitely.
But yeah, I think good for me. Nothing else to add.
No, so I want to know how long do you think it will take for new regime to take over the old regime?
Uh, I think between last budget and this budget, based on the filing numbers, I think they decided that it was time for them to do some changes to the slabs, and they've made that.
Right.
So government has also introduced a new form, a common ITR actually. Uh, so this was announced back, I think, in September. No, I'm not sure about the exact date, but September, October is when the common ITR was introduced. So this year again they will monitor or they will see how many people are opting for new tax regime, and if it is found that people are still not taking or opting for new tax regime, they will figure out what is the best way to push people towards choosing of
Remove
tax regime.
some
And
deductions or
yes,
something.
and they've also made new tax regime as the default one.
Yeah.
So there can be a few more confusions around this, like because when they introduced new regime, the option available to a taxpayer to opt for it was for one to file Form 10 IE when one has business income. And thanks to COVID, a good chunk of taxpayers have decided to explore the stock market and the derivative
Right.
market. And the recent SEBI report was also very evident that option trading has increased. So,
Right.
aware or unaware, one or another, at least two or three out of 10 individuals would have ventured into derivative segment. And there is a good possibility that you guys have earned business income, that is the derivative income, or you've suffered some loss. So then, if you opt for new regime, you have to be very careful, and because there are fine few conditions attached to it which are presently making people to not opt for it or to shy away from new tax regime. So once that is also addressed, I think another one or two budget is what it will take for government to say we are pulling the doors on the old tax regime, and it will only be new. So probably if you're investing, invest for making money, to earn money. Don't invest to take away my money by saying I'll save taxes.
Oh, so,
Maybe another one or two budget is what it will take.
okay.
Okay, then I think we can conclude. We are reaching the session time. So it was a nice discussion, and hope to see you guys again in the next budget, or if any other new announcement that the government makes. Let's
Okay.
catch up with them again. Thank you, guys.
Super. It
Thank you.
was pleasure.
Thank you.
Thank you so much.
And thank you, Mani. It was a wonderful,
And Mani,
wonderful.
special thanks for hosting so nicely. It was very,
Sure,
very
sure.
smooth and free flow, actually. Thank you so much.
Thank you.